When it comes to life insurance, there are only two types, a term and a permanent. Now, when we're talking permanent, there are a few different types of permanent life insurance that are out there. So today, let's talk about the three types of permanent life insurance. The first type is going to be whole life. The first feature of a whole life policy is that your premiums are going to be fixed, meaning that they remain the same amount for the duration of that policy. The second thing is that your death benefit is going to be guaranteed as long as those premiums are paid every single month. Now, the biggest difference between whole life, universal life, and an IUL, which I'll tell you guys about here in a second, is the interest rate that you get on your cash value money. So with the whole life, your cash value interest is going to be fixed, meaning that your interest rate is going to be locked in and is going to be guaranteed for the life of that policy. And when it comes to the investment risk of having a whole life policy, the investment risk is low because the insurance company, they are actually going to pay you out, again, a guaranteed rate of interest no matter what. Now, the second type of permanent life insurance policy out there is what we call a universal life insurance policy. Now, when it comes to the premiums with the universal life policy are flexible, meaning you can adjust those premiums to go up, go down, and even stop payments depending on how your policy was structured and the company that you are with. Second thing, the death benefit, that is flexible as well because you can increase it or you can decrease it subject to additional underwriting. Now, when it comes to the cash value and the interest that you get with your universal life insurance policy, it is kind of similar to the whole life because the insured, they are going to declare a set fixed rate. Now, keep in mind that this interest rate can actually change, but it's dependent on the insurance company. And just like with whole life, with any permanent plan, you have the ability to take a loan out against your policy. And so when it comes to the risk to the insurance company for offering a universal life policy, it will be considered medium risk. And it'll be considered moderate because the interest rates can change over time. But for the most part, it's going to be declared and it's going to be fixed by the insurance company. And now the third type of permanent life insurance policy is going to be an index universal life insurance. So just like with the universal life, the premiums are flexible. Again, you can go up, you can go down, and you can stop payments with your IUL. Second thing, flexible death benefit. Again, it can be increased, it can be decreased, subject to additional underwriting. Now, the interest rate, this is what makes IULs so attractive to a lot of different people because you can get market-like gains without any of the losses. So let's take a look at this example right here. So with an IUL, they have established two things, a floor and a cap. So the floor is going to be 0%. And the cap in this example is going to be 9.5%. And so the way that they determine the interest rate that you get is by tracking an index such as the S&P 500, the NASDAQ, any of those types of indexes that are in the market, they mimic it. So your money is never invested in the market at all. So for example, let's say that the market went up 30% and your cap inside of your IUL is 9.5%. So if you were directly invested in the market, you would get the 30% of interest on your account value, right? But with the IUL, you don't get the full 30%. You are capped at, you are limited to the 9.5% that has been declared with your particular policy. And so let's say that you had $10,000 sitting inside of your cash value life insurance policy. At the end of the first year, your account is going to be credited 9.5%. So in this example, you started off the year with $10,000. You made 9.5% on that $10,000. Now your new account value is $10,950. So again, very, very different than the whole life and the universal life because their interest rates are going to be fixed. Regardless of what the market does, it is going to remain the same while you have that policy. So that explains the cap. The 9.5% is the maximum amount you can get credited on any given year. Now, the second part is the floor. So this again makes an IUL so attractive to people who are about to retire, who simply just don't want to lose their money. Because let's say that the market went down 30%. So again, if you were invested in the stock market, your 401k, IRAs, Roth IRAs, any of those types of accounts, you would have lost 30% of your account value because you are in the market and you are exposed. Now, with an IUL, my clients don't gain any money, but they also don't lose any money. So again, they stay at 0% until the market goes back up again and it corrects itself. And again, you have the ability to take out tax-free policy loans from yourself, in which you do not have to pay them back because it is going to be deducted from your death benefit. Permanent life insurance policies are supposed to be used in life right now while you are alive. And so if you are just wanting to protect your life and leave a legacy for your family, and you don't really care about using tax-free money while you're still alive, then a permanent life insurance policy may not be for you. If your budget is really, really tight and you cannot afford to, save a couple $100s every month, then a permanent life insurance policy may not be the best fit for you right now. But I would suggest you starting off with the term policy, because the term policies that we offer are convertible, meaning that you may like the permanent life insurance policies, but your budget, they may not like it as of right now. So you can start with the term, and then sometime in the future, we can convert that thing over to a permanent life insurance policy without you having to go through any type of underwriting or anything like that, because you are going to be locked in with your current age and your current rate. And so I hope this video was helpful for somebody, because I see a lot of people think that whole life is the only type of permanent plan out there. They're talking about cash value, trash value, all of these things that I see on TikTok, which are absolutely not true. And if a person cannot explain and break down the different types of permanent plans, I will really warn you to take caution when taking somebody's advice who did not give you all of your options. If a person has to bash a different type of product to get their product off, I would take caution with that as well. And so again, as I always say, feel free to follow me. Comment any questions that you may have about permanent life insurance, cash value, any of those things. I am here to simply bring you guys clarity and information that you may not otherwise find anywhere else on TikTok.